Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. It helps if the microphone is in front of your face, doesn't it? Oh, and the lights are on. Listen. Wait, why is it not playing? Oh, is it playing on my phone, perhaps? This computer. There we go. All right, here's the thing. I got a surgery today, so that's why I kind of like the glasses, and I'm a little bit discombobulated and stuff. Let's go to the charts. Let's see here. Where's our chart? There we go. All right. So, though this is so interesting. Okay, so yesterday we had that big BLS jobs revision number. I'm not really sure how anticipated it was in the market, but I tell you what, when the number was supposed to be released, there was all sorts of volume and I guess algorithms trying to trigger people. Eventually, the treasuries did move higher, but now here this morning, we are at like opening basically at or maybe even a little bit below yesterday's lows in the treasuries. Okay, and here we just got, I'm totally behind. We did just get the continued jobless claims. We got 232 versus an expected 232. So that's kind of a big reaction to that over here on the DOM. That's kind of a big reaction to that for a number that was like almost exactly in line. Oh, no, wait. 232 versus, no, it was exactly in line. Okay, I don't know what to make of that. Anyways, back to the chart. S&P 500 pushing a little bit higher in the overnight action, not reaching yesterday's high quite yet though. Oil continues to be on a downtrend and really seems to be headed towards the $70 point. Okay, gold here, bottom of its range, but still pretty good. And same with copper, although copper had a little bit deeper of a overnight move down. And then we've got the Japanese yen, still within its range here. Still within its range, and the dollar kind of maybe finding some support around 101. Bitcoin? Bitcoin able to stay above 60,000, at least for now. Zero Hedge saying, oh, there's like a short squeeze. Okay, that was your short squeeze? That's your short squeeze? Okay, Zero Hedge. Maybe stop shilling a little bit so hard. All right. Let's see here. Oh, my chat here needs to, I need to refresh this. There we go. How are we? Octavius. May the fake numbers be with you. My gosh. That's on how late? Wait, why wasn't that late? You know what happened this morning was I woke up at about 4:30. So about an hour early. And I went, oh crap. They told me that I need to, before I come in, I need to wash with antibacterial soap. So before I started the stream, since I'm not allowed to eat, I went to Walmart and bought some antibacterial soap. I tell you what, by the way, there's no good looking people at Walmart at 6 o'clock in the morning. Good grief. He gets his boob job today. That's so funny, man. We're totally nothing should change with the stream other than there's no way I'm going to take a trade today, right? But the surgery's not till 10:30 my time, so we, can just do everything as normal. I think I'll even do my morning stand up see what's going on. Make sure I know everything that's going on over there at work. Actually, I think I'm gonna turn the laptop on in a second, check something. But yeah. Calendar drama question mark. Well, so we get US S&P Flash PMIs, or not Flash, but just US S&P Services and Manufacturing PMI. Oh, it is Flash. You know what? I'm not gonna be 100% today. Okay. I'm not normally I'm on my ADHD medications. Not supposed to take any of that stuff today. And I'm a little nervous. You know, last time I had the surgery, it was for my deviated septum. You know, like it usually comes down to like halfway, 3/4 through the year, am I actually using my FSA? And if not, you know, let's use some of it. So that's kind of a little bit of what this is about. But it's really starting to bother me too. The elbow is really starting to bother me too. Like I can't really work out hard right now because the elbow just hurts. And it's been like this for like 2 months. So it needs to happen. But oh yeah, look smart because I have the glasses on. I don't know if these are really the best looking glasses, to be honest with you. I selected these glasses because they gave me a wider field of vision. Not that I ever wear them, but maybe I need to play it up. Maybe I need to get the glasses, get out the Brooks Brothers shirts, you know, tie maybe, look the part. See how that helps the stream. Instead of wearing a t-shirt. It was as casual, as comfortable as I can get and go into the surgery. Because I tell you what, the most annoying thing. So I have not had a lot of major surgeries. In fact, I always remember feeling like, man, everybody else has had a major surgery and I've never had a major surgery. I'm sure I'm lucky, right? But I have to get my colonoscopy every 2 years. So, you know, I go under for that. So like, that wouldn't necessarily be like a surgery so much, but they do put you out for it, right? And I tell you what, nothing's worse than when you're coming back to, you know, and you can't get your clothes on, right? You want to change because it's cold. You want to get into more comfortable clothes and you can't get your clothes on, right? So I wear the most comfortable shirts I can. Put on some sunglasses. Wait. I have, well, they're not. I wouldn't necessarily call them fancy, but I got these sunglasses that are climate control for my allergies. See, it's got like they've got like these foam gaskets on them. There you go. But for that, it doesn't fit over the. But I bet you they won't fit over the glasses. No, they don't. Not even close. So I can do that. Now I can't see anything. But do I look cool? Do I look cool? Do you look at this and I'm like, oh, I wish I can't even see enough to like click and make it full screen. That's how bad my eyesight is. I can see a message, but I can't read it. But is this like you come into the stream and you're like, well, I think I should stay and watch this guy because he looks kind of cool because he's wearing sunglasses? I hope not. If you think that, then you're probably watching the wrong stream. A perfect for trading when you lose because they can't see the tears. You know what? I like that. Next time I'm really sad about a trade, I'm just going to let it all go and put on the sunglasses. You know, I don't think I've ever cried over a trade. I've certainly felt like it, but I don't think I've ever cried over a trade. But I've never taken a huge... And the whole thing is the amount of risk that I take is really quite minimal. You know, I was reading this thread yesterday on Reddit, of course, the day trading subreddit. And, you know, this guy, are you getting saline or silicone? No, I'm getting, did I show you guys the picture? I don't think I showed you guys the picture. No, I showed you guys the picture. I did, because I sent it, because I've sent it to myself over here. And download it again and open it up for you. There's the picture. See, that's what it was. And then I had a what do we call it? A max out. Did a max out session, and apparently the, you know, like the bicep tendon like goes over this, and apparently it broke it off. So they're gonna go in there and they're gonna snip that off and clean it up, I guess. And it'll be interesting. It's kind of funny, you can see there when they took the x-ray. Look at that. Look at how inflamed that is relative to that one. Inflammation has gone down. But yeah, that's what they're doing. That's what they're doing. Man, but you know what? That kind of puts things in, because I'm a little bit more nervous for this one than the last things. Like, you know, colonoscopy first time was maybe a little bit nervous, but like, not really. And when you get a colonoscopy, more than anything, you're just hungry and really tired and everything, because, you know, the whole thing about you having to flush yourself out, I don't need to go into. But, you know. Then when I got the deviated septum done, which I'm thinking back on it now and I'm like, you know, that was a pretty major surgery for something relatively innocuous. Was that surgery really worth it? Oh no, but you know what it was? I remember why I did it now. It's because my wife wouldn't stop complaining. Like, even though I would wear a nose strip every night, like, it drove my wife nuts. So that's why we did that one. But, you know, that's like surgery on your face. You know, that's like they're going to go up into your nose and your face, and they're going to, like, break bones in your face. That's kind of freaky, isn't it? And, like, the whole thing is like, you're letting people that you barely know do this. You know, like, I had met that doctor, like, once. You letting this guy cut you open? The whole surgery thing is wild, because it's like a whole team of people. Do you really trust these people? You only trust them because, you know, they're professionals, and you can't just go and pretend to be a surgeon and everything, right? But like good grief, that's a lot of, I wouldn't trust my wife to cut me open, right? Like, this time they're going to cut open my elbow. Like, you have to make an incision. I'll do it on this elbow because it's harder. This is not the elbow that they're doing it to, but, you know, they're going to have to make an incision along the elbow. I don't know how big it's going to be, but they're going to have to make an incision, and then, you know, they kind of have, I think they put cameras under there and everything because it's like under the tendon. Kind of freaky. The whole thing, just thinking about it, like, the trust that we put in surgeons is a little bit wild. So yeah, this one is making me a little bit more nervous than the others. But part of that was maybe just you sleep. You know, sometimes when you're sleeping, you'll get weird ideas in your head, or in dreaming and whatnot. So like I woke up early. I had an hour to sleep about it. I'm sitting here talking to you guys. I feel normal, other than that I'm wearing glasses right now, and that I didn't take my ADHD medications. But I don't feel nearly as scared about it. Well, I tell you what, one thing I'm noticing here as I'm wearing my glasses is that, man, there's the color fringing, a little bit of color fringing. If I'm not, looking at it right on, I see the distortion. So you probably see me moving my head a lot more. That's the surgery that I really need to do. That's the elective surgery that I should be saving up for, is eye surgery. Oh man, to be able to wake up and not have to put on glasses or contacts. Something that I haven't done in 35 years. That would sure be nice. Yes, I should do that. Yeah, not this year. Probably not next year either. But we're getting somewhere. I'm not nearly as stressed out as I was 6 months ago. Because 6 months ago, it was like, if I don't take my eyes off of my sons, if I take my eyes off of my sons for 5 seconds, they're going to kill each other. Right? Now, we still have to watch them, but, it's a lot easier. That's a lot easier. Part of that is because Ethan has found out what an iPad is. I try and limit how much they're on those devices, but they still really like it. And it's especially when mom is making dinner, give them the iPad. Now they leave her alone. Right. And so a lot better. I still have late nights where they're not going to sleep on time, not really getting to bed as early as we really want. Had a night like that earlier this week, wasn't it? Almost, it's like I can barely even remember it now, but that was earlier this week, right? When Asher puked in the bed and everything. Oh my gosh, that was Monday. Oh, that was so bad. But this whole thing, ever since Asher has been born, I've seen its effect on both my ability to create content and my ability to take on risks. And I think that there's probably a year or two yet of that before I'm 100% and we can go hard. But maybe we're, the rest of it is downhill. You know what I mean? Well, I've talked about myself too much. You know what we should talk about? This whole BLS disaster yesterday. Oh my gosh. Actually, let me read you guys the Zero Hedge story about this. Where is... Oh, it fell off. Hold on a second. Oh man, and when it falls off, it really falls off too. No, I missed what that guy was saying. There's a Fox Business interview by somebody. I guess I should also note, in the title, we've got RFK reportedly going to endorse Donald Trump this morning. That one's kind of weird to me, to be honest. If you haven't noticed, I'm not really a fan of RFK. Kind of seems to me like he shopped himself to both campaigns. Kamala told him to take a hike, and Trump was like, okay, maybe we can give you a cabinet position or something. which I don't really like, but, politics, sometimes you have to think like a psychopath, because otherwise the psychopaths will do their psychopath things and beat you. And could RFK being endorsing Trump have a measurable impact on the race? It could. My understanding is that his support in the race is like 4%. So Namra says apparently the CIA director, maybe FBI, maybe, could be. We'll see. When this first came out, the rumor that I heard, and I don't think that this was a rumor as much as it was people speculating. The speculation that I saw was that he would be attorney general. And I'm like, my goodness, if Donald Trump makes him attorney general, then he has really learned nothing in the past 8 years, has he? Because I think that Donald Trump had more trouble with the attorney general position than anything else, right? That whole thing was a mess, right? Feds Collins says job market's healthy despite revision. Oh, okay, you're right. It's Collins is the one that's speaking on Fed business. On Fed business? On Fox business. Let's see here. Nassim Taleb says the tendency over the past 3 years, after the past 3 millennium, is for more universalism, equality of rights across humans, and more individual freedoms. The two are sometimes, but not often, in conflict. Wait. The freedom, equality of rights, and more, and individual universalism versus individual freedoms? Okay. An example of a conflict is the right of states versus abolitionism in the 19th century, the U.S. Civil War. Another is political correctness and cancellations, but the tendency for more universalism is inexorable. Nobody can successfully fight history, which is the problem of Israel. I'm not so sure that applies to the conflict in Israel, because the conflict in Israel is not a conflict about universalism versus individual rights. It's a conflict between people who want to live and people who are religious extremists. But okay, Nassim. I just do not like his tweets these days. I'm almost tempted to take him off just so that I'm not tempted to look at his tweets and read them. If it's not something about the market, I probably shouldn't be reading his tweets. Anyways, RFK has talked a lot about like the deep state sort of stuff. So a position in the FBI or the CIA makes a lot of sense to me. Personally, though, if it was me, I would be giving him a token position, like Department of Transportation Secretary. Right. It just makes me think about Buttigieg. It's just like, they gave you the, like, what experience do you have in transportation? Right. And yet that position has been in the news many times for his failures. I really, really hurt him. Otherwise, he would be like a leading candidate for, president. Can you imagine? What do you guys think? What if we go back in history and Joe Biden decides to never run for a second term? So the Democrat Party was forced to have an actual real primary and all of that. Who would win? I really don't think that Kamala would win. But there's not like really a big name moderate that, would sweep everybody. for all the talk about how big the political divide has become and everything, and it's certainly the case that Republicans have moved further right. But I also feel that that's a little bit exaggerated and misconstrued by some people, because I think that the left is much closer to bringing the United States to communism than the right is to bringing the U.S. to a religious theocracy, right? So I really can't think of a moderate Democrat that would stand a chance at winning the Democrat primary. If you had one and they were an old timer, somebody with name recognition maybe similar to Joe Biden, then they would probably sweep it. But given that, I don't know who it would be. Maybe Bernie would run again, and Bernie would probably win. But that's the whole thing, is that I would vote for Bernie Sanders over Kamala Harris. I hate Bernie Sanders, but Kamala Harris is even more extreme than Bernie and less experienced. So, I mean, neither of them really have executive experience, but give him the FDA. Oh, there's another good one. There's another good one. No, well. So anyways, I got into all of that. You got me distracted. I was going to read this story. This is a zero hedge story. Just keep this in mind. So they're going to have their opinion. But I totally agree with their opinion in this case, okay? It's delightfully fitting that on the day the entire financial world was holding its breath for Biden's highly politicized and grossly incompetent Bureau of Labor Statistics to admit it had massively effed up the jobs data over the past year, that Biden's highly politicized and grossly incompetent Bureau of Labor Statistics effed up even more. At exactly 10 a.m. this morning, the BLS was supposed to publish its annual, this is yesterday, its annual CES preliminary benchmark announcement revision, an update on how many jobs in the past year were, for lack of a better word, made up. As we reported, it just so happened that the number was 818,000, which was the second biggest annual overestimation in job creation in U.S. history, something that surely was a pure coincidence in an election year. However, 10 o'clock Eastern time hit and nothing happened. Millions of traders, thousands of economists, and countless macro tourists. I've never heard that term before, but I think I'm going to use that, because I think there's a lot of people that are, on the internet, especially people commenting on r/economics, that are actually just macro tourists. They're not actually really watching the economy. They just kind of casually will note a report when they get linked to it. Anyways, we're furiously slamming the F5 key, refreshing the revisions page to see nothing changed. This went on and on and on, and even though the market actually reacted as if data had been published, it turned out that algos were merely responding to phantom triggers in hopes of triggering momentum ignition up or down. No actual data was reported. As the desperate wait continued and seconds turned to minutes, we joked nearly 30 minutes after the report was originally due by publishing the phone number for the BLS department responsible for today's report. The guy that had the number and published it to Twitter had already posted that, and before that time that Zero Hedge is reporting. Anyways, as it turns out, at least some people had more luck than us in reaching said department. We repeatedly got voicemail with the promise that someone would get back to us in 24 to 48 hours. Because as Bloomberg reports, at least 3 banks managed to obtain key payroll numbers Wednesday, while the rest of Wall Street was kept waiting for a half hour by government delay that whipsawed markets and sowed confusion on trading desks. That's right, while the rest of the world was freaking out, paralyzed by the gross incompetence of the Biden's Department of Labor, which, as a reminder, was merely informing us of just how incompetent it truly was by overestimating nearly 1 million jobs in 2024, banks such as Mizuho, BNP Paribas, and Nomura all called into the phone number listed above and got an answer by some absolute BLS moron who was not aware that they were leaking material, non-public information, and extremely sophisticated investors, while the rest of the world was stuck in the dark, courtesy of, well, other absolute BLS moron who had days, if not weeks, to prepare today's report and still couldn't get it out on time or even 30 minutes afterwards. Then, frustration turned to anger and outrage on Wall Street as word spread from trading desk to trading desk that the BLS was releasing the number to some firms over the phone. When the data was finally released shortly after 10:30, it showed payrolls will likely be revised down by 812. You already said that, Zero Hedge, but whatever. The biggest downward revision to the jobs number since 2009. Not unprecedented, but it's pretty major. Okay. Stocks initially jumped and bonds gained because the report lent support to speculation that the Fed will start cutting interest rates next month, then quickly reversed as panic seemed to sweep over Wall Street at the thought that the Biden administration had been actively covering up a labor market recession. In the end, Hopium won out and stocks closed near the highs of the day because, well, Powell will always make sure stocks keep rising. Okay, so I'm not so sure about that. So first of all, there was some down movement around the time that the number was released, but I wouldn't read that necessarily as, the informed traders picking a direction. Now, it did very gradually lift higher after we were done trading, so it does look like they're reading it as the Fed is likely to be easier. Now, the whole thing here is that when you actually do the numbers, it's basically a change of 0.5% in unemployment. So change of 0.5% in unemployment. That's not the end of the world, right? In fact, really, that doesn't change a whole lot. The Federal Reserve was planning on cutting rates in September, and they're still probably going to cut rates in September. Like what we got from the meeting minutes was that pretty much everybody was thinking that they would cut rates in September. So I think that it doesn't actually net change anything. Anyways, but the bigger thing for me is that almost every jobs number during the Biden administration has been kind of fishy. Like the numbers have been way outside of what the consensus estimate was, and they consistently revise the numbers down by pretty significant margins. So I don't think that you could really argue convincingly that like the number is just completely made up, right? That they go and they look at the real number and then they say, well, let's make the number a little bit better than that, and this is the number that we need in order to quell the markets right now. Like I don't think that they can do that. But what I do think is happening is they have a certain methodology and they make changes to the methodology, and you could make a change to the methodology that would make the jobs look a little bit better than they really are in the short term, at least. So I kind of suspect that that's been going on, and now you see it's 812 of a revision. That's huge. It's not like a huge change for like unemployment and what the Fed is going to do, but I think it's kind of huge for those of us that are like sitting looking at the number and seeing these huge moves off of it, and then going back and looking at it and being like, well, yeah, and like every single one of those was based on an inaccurate picture of what was really going on. Well, it makes it especially hilarious that the incompetence came on the day the BLS was admitting 12 months of prior propaganda incompetence. Seriously, not even the USSR had F-ups of this caliber. The delay and subsequent one-by-one disclosure is the latest in a series of embarrassing mishaps to roil the labor market data releases, which, hilarious, is who the markets have to rely on for accurate data on the state of the US labor market and the trajectory of inflation and the economy. In a post on X, the agency said it was looking into the reason for the delay, to which we responded that when the idiots responsible for this latest F-up are fired, the BLS should make sure to seasonally adjust it so that it adds at least another 1 million government jobs. The Bloomberg reminds us the government economic data reports were once released under lightly controlled embargoes to accredited news agencies, including Bloomberg, but the practice was abandoned during the pandemic, when departments across the government shifted to just releasing the data on the internet to everyone at once. Officials said that method would better protect the security of market-moving data, but instead all it did was create groups of wealthy super users who had preferential and early access to government data from Biden's corrupt agency. And that's the key thing that I wanted to point out to you guys, because we were kind of talking about this the other day, when you guys were like, it kind of seems to me like sometimes I don't get the number that much faster from Financial Juice than I do from other places. Well, I think that having them say it to you in your ear so that you can keep on your eye on the Dom is a pretty big edge still. And, having a news squawk for like breaking news and all of that is really valuable as well. Okay. But there is something there that because all of these guys are getting the number from the BLS website, there's less opportunity for them to generate an edge by getting the number a few seconds earlier than everybody else. When it didn't come out on time, Yelena Shulyateva, senior U.S. economist at PNB Paribas, said she kept refreshing the webpage waiting for the numbers. Then we called the public line a couple times and they gave us the number. Steve Rushito, chief U.S. economist at Mizzou, did the same. Knowing the data was delayed, we had to call for the number before it showed up on their website. Zero Hedge itself received the leaked data at 10:24 Eastern Time through our expert network, but not even we dared to publish it to our premium subscribers amid concerns that the BLS could not possibly be this stupid and incompetent to be releasing the number on a case-by-case basis instead of blasting it to the entire world at the same time. They're obviously a little bit sore about that, because my perspective was there was tons of people, we're all saying, well, it is released. Some people might have it. Well, let's go around on Twitter. Maybe somebody has a data source that was giving it to them. And we were seeing phantom numbers all over the place until and so in that case, it kind of seemed like, oh, maybe we have it, but I'm seeing so many that I can't trust it. And it was just confusion, but I certainly knew. And then like the other thing is if you did have the number early, what would you have done? Because especially for as a short term of a trade as we make, there was so much volatility throughout all of that and everything that you wouldn't really be able to get a very good advantage out of it. And how would you have known that it was really going to move up afterwards and that there'd be a downside first? And, so I don't really think anybody got a really good advantage from it. In the end, it turned out the BLS was even more incompetent than we could possibly manage. I'm more than a little annoyed, said Troy Ludka, senior U.S. economist at SMBC Nikko Securities Americas, who was among those who waited on the public release. To put it in the most generous terms, government agencies absolutely cannot be selectively releasing critical market-moving information to some agents and broker-dealers first via telephone, while keeping others in the dark. He said this is anathema to the very idea of a balanced market built on fair, accessible information. Because I feel like, they were giving the information to everybody that called, or at least that they spoke to on the phone. That's not necessarily selectively, but I digress. And then he says, Troy, you haven't seen anything yet. If Kamala wins and the U.S. goes full communist, the very idea of a balanced market will be anathema, replaced by central planned, everything. So it was a real disaster. This is not the first screw up that they've had at the BLS. I've seen a lot of economists, talking about this, and they're like, like what the people do at the BLS, they're real professionals. They really know what they're doing, and we can be assured that they're doing the best job that they can over there. And I'm sitting over here like, how bad does this have to get before you admit that there's something wrong? Like, again, I don't think I can claim that they're like intentionally fudging the numbers, but what I can say is that the methodology that we have is not the best. And how bad does it have to get? How long does this have to go on for before somebody says, hey, maybe we should adjust our methodology a little bit? Do you take any trades live? Not today. I did one. Well, I haven't taken any this week, actually. So this, it's kind of been an interesting one because this week, going into the Jackson Hole Summit on the weekend, is traditionally one of the quietest weeks, but it's actually been pretty busy, especially with that nonsense yesterday. So I took some live trades last week and did okay, but I haven't taken any this week, and I'm not taking any today because, I'm preparing myself for an elbow surgery later. Can you backtest using Omni Market Depth Level 2 Strategy Analyzer? Maybe that's a spelling mistake and you weren't asking about a specific product, but just if we're talking about level 2 data, I am not aware of any platform that saves the level 2 market depth information. I mean, it's a lot of data to save. I save it, so I can do back tests like that, but it's all the raw data. So to do a back test, I would have to, take in all of that raw data and turn it into data series that the NinjaTrader backtester could then utilize. A little bit of work that I haven't done. You have an indicator that goes off when half the book pulls? Well, we have the market depth tape, right? So the market depth tape will tell you about large orders stacking and pulling, and you can set your threshold to when it makes a sound to whatever you want. So you could set it to be like a relatively low number, and then you'll kind of be hearing almost like radiation noise all of the time. And then when they pull, it will be like, you'll be like, oh, okay, something's going on. What is your return to date to like this year? I think we're negative this year. So you have to go back. What was it? 2 days ago? And we kind of sifted through some of my results as of late, if you want to see that. So, well, yeah, listen, if you're day trading, then your objective shouldn't be to beat the S&P 500. Well, if you're day trading and your objective is to beat the S&P 500, then just realize that really what you're doing is you're taking on excessive risk. And you can only do that for so long before it will blow up in your face. No, day trading is really the kind of like quintessential day trading strategies. Like, let's say the ones that day traders used 20 years ago that aren't so profitable anymore because of robots, right? Are not about beating the S&P 500. They are taking a lower return in exchange for a more consistent return. Make a certain minimum amount every day so that you could live on it, right? So that it could be like a paycheck. If you want to beat the S&P 500, then you're much more likely to have success with that by investing in individual stocks. So the easiest thing to do would be to build a small stock portfolio of stocks that have higher beta, that have a beta over 1. So now you have a portfolio that roughly matches what the S&P 500 should be, but the riskier names. So in general, when the S&P 500 goes up, your stocks will go up more, and when the S&P 500 goes down, you'll go down more. But you buy and hold that, and you hold it for a long time, you'll probably make more than the S&P 500. You won't get the Sharpe ratio. The Sharpe ratio will be bad because you're taking on risk to get that better return. But that's the easiest way to do it, right? And then there's, all sorts of like swing strategies and things like that that you can do that you might be able to beat the S&P 500 return with. But if you go into like, I'm going to day trade, trying to beat the S&P 500 consistently is a pipe dream. Okay. Probably not going to happen. Yeah. Any other YouTuber would have said, oh, I'm up 7,000%. Like, to be honest, I really don't think we'd come back. So I'll be here tomorrow. I'll be here next Monday. I'll be here several years from now. I don't think I'm going to see NA again. The people that ask that question usually don't come back. And to be honest, I'm kind of trying to dissuade them, right? Like, if that's what you care about, that's a really big red flag to me that this probably isn't the field for you. Because the reality is, like, seriously, like 95% of day traders lose money. There's only like this small subsection of day traders that actually net make money in this over a long time period. And those guys are probably just lucky. They're probably the majority of that 5% were just lucky. Like building an actual sustainable edge. And like for me, sometimes I have an edge and sometimes I don't, right? The degree to which I have edge is dependent on how well I understand what's going on in that market relative to the rest of the market. Okay. So there was times like in 2021 when inflation was coming up, and we understood that information better than the market did. And so we were able to anticipate that the Federal Reserve was going to have to raise interest rates aggressively, and we were able to make money off of it. And I did really, really well during that time, right? The beginning of the year kind of had some weird moves, and I was not super well prepared for it, so I didn't make very much money. Of course, when you're talking about me and it's like I'm net down, we're talking about like I'm net down $200 on the year. So it's not a big deal. But I don't always make money. And I put that out there as a thing because I know that there's a large group of people that will dissuade them. And, that's one of my filters, is that I want the people that they are interested in pursuing it, even if they're told that they're probably not going to make money from it. Let's see here. No, do you live on your trade income? No. No, that is living on trading income sounds like an absolute nightmare. Can you imagine sitting here and being long the treasuries right now and being like, if the treasuries decide to go my way and go towards that high, then I will eat tonight. And if they don't, then I don't know how I'm going to pay for anything. That's a nightmare, man. Why would you do that? Why would you do that to yourself? Right? You used to be able to do that in the 70s and 80s. It's not common now. Robots is not common now. This thing you got to understand. The market changes, and where the opportunities are in the market changes. And where the opportunities were in the market in the 80s, you could make a lot of money by being a local and going to the CME every day and trading in the pits. The majority of those people still lost, but there was a lot more that had success than there are today. Today, trying to make a living like that from day trading futures, not advisable. Not advisable, okay? Now, if you have a lot of money and you have the ability to take on risks, that is, you don't need the income anyways, then you can make a ton of money from it, right? But that's from taking on risks in key locations, and it's kind of maybe more about being a sniper than it is like coming in and making money every day. right? Today, like the opportunities that you're going to see in today's market are much more around options, 0 day to expiration options, cryptocurrencies. You're going to see a lot more people building wealth, making money off of those things. But then there's a whole host of issues that come along with those assets too. You know, like 0 day to expiration trading is kind of gambling too. You know, like the day trading strategy for that is probably sell the 0 DTEs and then hope that nothing crazy happens. Up P&I would be nice, but it kind of goes and sitting there like, oh, I think you meant P and L. Oh, I mean, maybe that is an L and not an I. I digress. Positive P&L would be nice, but it comes and goes like Gates sitting there late at night making windows, or the light bulb guy always at the lab. Pump and dump a shitcoin, yeah. So guys, let me tell you about this amazing opportunity called Garlic Coin. And I will conveniently neglect to mention that I own a significant portion of Garlic Coin. A significant amount of Garlic. Actually, I haven't looked at that in a while. Let's go look at that. I bring up Garlic Coin. Of course, I have to come in and look at the chart to see how my small fortune is doing. Not so good, because they are below a cent right now. That's not what I want to see. Wait, where did it go? Oh yeah, I already pulled it out. There we go. It's just below a cent. So that's probably towards the lower end of the past month, huh? Yeah, because at one point it was 1.5 cents. Well, that's no good. That's no good. We need to get them back up here again, past the, how far was it? This whole thing right here. Oh, it's funny, if I do that, it anchors me to where the beginning was, because there was, when Garlic Coin was first released, and people were asking $1.60 for it, that was ridiculous. That was like ridiculous. And it was, honestly, it was kind of a little bit of a rug pull. There was people that had a ton of coin and they sold it. And then it was kind of left for dead. And then there was this spike that was short-lived, because there was this one guy that had a lot of it that couldn't, you know, had to take his profits. Okay, build the momentum. But someday, maybe someday in the future, if they catch momentum, the cryptocurrency market is going crazy again. I don't know if the cryptocurrency market will go crazy like that again ever, though. I kind of hope that it doesn't, because I'm not a fan of cryptocurrencies anymore. I mean, I never was a fan of cryptocurrencies, but now I really completely despise them, and it scares me when I see U.S. presidential candidates endorsing it and things like that. Research CASPI, or is that CASPAL? I can't see. Oh, it's CASPA exclamation point is what that is. Okay. CASPA. Sure. If there's any shit coins that you want to promote here, you know, put them in the comments. We'll mention them all so you can get the pump. Let's see here. CASPA is the fastest open source, decentralized, fully scalable layer 1 in the world. Oh, they've got all of the wonderful cryptocurrency buzzwords in there, but what does it actually fucking do? The world's first block DAG. Okay, DAG meaning directed asymmetrical graph? Or is it, I forget what DAG stands for, but it's a computer science thing. A digital ledger enabling parallel blocks and instant transaction confirmation built on a robust proof of work engine with rapid single block intervals. Okay. So instant proof of work, that's kind of interesting. What do you think about these future prop firms? I think that by and large, they are preying on people that have dreams about day trading, and they lure them in, and they have things set up so that it's always just kind of within your reach to get funded, and you even might get funded and pull a few $1,000s out of it, and then get kicked out. You screw up, and then you're back to paying them again. This is maybe something that I could potentially make a video about again. I haven't really, because I just pop it up every time that this comes up. If I come into my Python stuff here, basically, this is a Python script that runs a Monte Carlo simulation of people trading combines. So essentially, they come in and you take it trade by trade, and you have like a set risk reward with like a break-even win rate for that risk reward. And then we say, so if it's just literally like random trading, essentially. So I come in here and I want my wins to be like maybe I want my wins to be twice my losers, or maybe I want my wins to be half my losers, or what are the differences between that? Basically, like, what's the best stop versus target to optimize you to getting the best chance of passing a combine? Well, it turns out it doesn't matter. But anyways, that's the script. It's a pretty short script. You can see it right there. You could like you could rewind on YouTube and like copy the text if you wanted. And then it outputs a picture. And the picture kind of looks like this. So this picture is basically, running through all of these simulations. The running P&L of literally millions of traders going through this process. Okay. And what do we find? The vast majority of traders just immediately bomb out. Most people just immediately bomb out. And the people that do pass, it takes a lot longer for them to pass. So that's the first thing that you got to understand. It's a significant I'm going to close this. It is significant that the combines make you pay for the combine every month. That's a significant factor. If you only had to pay once and that combine was good for as long as you traded it, they would have problems, because part of it is that the people that do pass probably paid for 2 or 3 months before they passed, right? And when you look at all of the numbers and everything, it turns into about 25 to 35% of people, just from pure random chance, will pass a combine. And the people that don't pass a combine are basically paying for them and making up for it. But then the thing is that more people fail than that. The pass rate is more like 5 to 10%. So yeah, they're raking in money from people failing the combine. And as far as I can tell, they don't really make a whole lot of money from their traders being successful. And in fact, some of these firms don't even allow their funded traders to actually trade. They are basically bucket shops. You win and then they put you on a sim. If you win on sim, they'll pay you, but it's a bucket shop. Your orders aren't going to the market. So yeah, I'm not a huge fan of the futures prop firms. I don't have any animosity to them. They are offering a legitimate product. I don't like the way that business runs, but there is a place for it. If you want to go in and take risks, right? If you want to come in and, really YOLO, you know, double down on trades and average out things and do all of the naughty things that kind of tend to work in the short run, but in the long run blow things up, then you can go and you can use the combine and let them take all of that risk instead of you. And then there's a use for it. And that's how you get these people that claim that they're pulling like hundreds of thousands of dollars out of these combines, is that they're doing really stupid stuff. If they were trading their own account, they would probably have blown their accounts. Which is also why some of the prop firms are starting to fight people on payouts. What is Amir saying about dogs? Create a cumulative delta. That makes no sense. That makes no sense. Because cumulative delta is based on market orders, which is to say that two people agreed on a price and there was a transaction. Whereas with cumulative delta, that's people putting orders out there at many different prices that may or may not ever get filled or trade. So, you know, like, cumulative delta for the book doesn't really make sense. What you can do is you can do things to kind of keep track of the pace of them. Like, are the bids, are they net stacking or net pulling? You know, like how much is the stacking relative to the pulling and all of that sort of thing. Right. And yeah, those things we show with my indicator suite that you get at speculatorsf.com. And they do have some use. They can, at the very least, they can key you into key changes, the key, like, balance points in the market. This is like all of the sudden that balance between limit buys and limit sells like flips and the market starts behaving differently. And you can see that in my indicators. Doesn't necessarily tell you what direction it's going to do, but it does kind of clue you in that something's going on, because it always seems to flip at key spots. You know, those indicators are really built for like go and back test them and stuff, right? So they were basically, there's areas in there that we believe there is some room to discover more about the book, and I'm basically giving you a tool to filter things in a way that you can actually do the research. So that's what those are really for, is for research. Okay, so the square root theory that you were talking about yesterday, do you have a good book or something I can look into that really caught my ear? Okay, well, so the first place that I learned about that is from my favorite book. It's buried here for some reason under my Kleenex box, but it's Trades, Quotes, and Prices, Financial Markets Under the Microscope. I really need to like open up one of those Amazon affiliate things and like put an affiliate link for this, because I mention it so much. And basically what this book is it summarizes 30 years of market microstructure research. So it's basically telling you everything that we've known from empirical studies about the market microstructure. And that includes things like, you know, how, you know, oddities in the rules of a limit order book lead to certain behaviors and things like that. Okay. And that is, the square root law is one of those. So initially what they did was they said, hey, Goldman Sachs, give us your data of the orders that you've executed over that day and let us study it. And then they looked through it and they said, oh, okay, they have to buy this huge tranche of stuff, and they can't do it all at once. And so they execute it, and it literally takes them all day to acquire that stock. When they do that, how far does it go relative to the number of shares that they're trading, right? And they did that research, and they found, oh, okay, it follows the square root law, which for those of you that weren't here yesterday, what that means is if I come in and I buy 100,000 contracts and it moves the market so much, people would intuitively think that if you traded twice as many contracts, 200,000 contracts, that it would move the market twice as much. But it doesn't. It follows the square root law. So it actually moves the market the square root of 2 times as much. And so in order to move the market twice as much, you would have to trade 400,000 contracts. So you start to get like a diminishing return on how much you move the market relative to the number of contracts that you're trading. And that kind of leads to some odd behaviors. So here's the kind of the cool thing about it that I didn't get into, but that I should bring up at this moment. Well, okay, so let me back up for a second though and make the first point that I was making, which was there was another study where they went and they got the data from Mt. Gox. So all of the orders across an entire exchange for like several months worth of data, in fact, I believe. And they found that the Bitcoin market also followed this square root law. And so that's why we believe that this behavior, and we actually have some models now to kind of explain what it is about the microstructure that causes this behavior. But that's how we know that the square root law is caused by the dynamics of the order book itself. So any market that uses a limit order book will exhibit that behavior. Okay. But the cool thing about it, let me show you here real quick. I'm going to pull this up. Let me make sure I got this all good. No. Come on. Oh, well, first of all, I need it to be a different color. There we go. Okay. So the formula for the square root law is this. Your impact, I forget which symbol they use for this. I think it's I. Your impact is equal to Y, which is a scalar unique to that instrument that you calculate based off of past experience. So like you execute a meta order and see how far it goes, plug in all of the other variables and solve for Y. Then once you have that, then you can use it to make future predictions. So what is that? Omega, that's volatility times the volatility times the square root of Q over V. Okay, that's the formula that they've proven. So if you want a quick thing, you don't want to go and read that book, just search up million meta order analysis in the Bitcoin market. It's a study. So the title is roughly something like that. And you'll see this formula in there, okay? So let's say that we are going to represent Q in terms of V. So we're going to trade a certain percentage of the overall volume, okay? So let's say it's going to be the square root of 0.01 V over the total volume for the session, V, okay? And that means these V's cancel out. And what do you get? The square root of 0.1. Now, does anybody know what the square root of 0.1 is? This is kind of a weird thing about how square roots work and everything, but the square root of 0.1 is 0.1. Okay. So what is actually happening here? 1% of the volume can be responsible for 10% of the volatility. Markets are inelastic. Orders have a very strong impact. And it's actually kind of like the smaller orders have a greater impact per share than the bigger orders do. That's why the market's so fucking weird. But yes, this book, Trades, Quotes, and Prices, that's all the research. And basically what you do is you read that book, and that kind of gives you like a base. This is like the stuff that's already known. Then what you can do is you can go to like archive.org. You know what? We haven't been there this month yet. We should go and see what kind of studies they've got. So archive.org, there's another website called SSRN. You're probably more familiar with SSRN because that's where like medical journals and psychology journals post their stuff. But for quantitative stuff, The most popular website to post studies like this is Archive, which is spelled ARXIV. The X is supposed to be the symbol chi, so that's why it's archive, right? archive.org/archive/QFin, or you just go to archive.org and, navigate to it. The quantitative finance section of archive.org. So what happens is these professors and PhDs and stuff that are doing research on these things, they will publish their study for free on archive.org when they're first putting it up, before it gets accepted by a peer-reviewed journal. In fact, this is kind of a way that they promote their study, right? So when you come here, you're getting the most recent research. And there's this section specifically trading and market microstructure, which is going to be the things that we're interested in and that this book covers, right? So you read that book, that kind of gives you enough context. Remember, I'm always talking about how you build intuition and everything, right? Your mind is kind of like a machine learning ChatGPT sort of a thing. And so to understand a lot of research studies, it really, really helps to have context, because they're going to mention other research studies. At the beginning of them, they're always going to say, well, there was this study and there was this study, so now we're trying to expand upon that by doing this study. And it really helps if you are already familiar with what those other studies were, right? And this book covers the most significant ones. You have a base of like what we actually know, so that this new research actually makes sense. Then you can come in here and go to the current month and see what they're doing. Data, time travel, and consistent market making, taming reinforcement learning in multi-agent systems with anonymous data. Well, that sounds very interesting. Correlation emergence in two coupled simulated limit order books. I am extremely interested in that study. I'm going to make a new tab for that. Forecasting high frequency order flow imbalance. That also sounds like something I'm interested in. Large language model agent in financial trading, a survey. Stablecoin runs and disclosure policy in the presence of large sales. Ooh. High frequency trading liquidity analysis. Less is more decision making using dynamic deep neural networks for short-term stock index prediction. So a lot of these studies are trending towards the machine learning side of things. Deviations from I forget what the Nash equilibrium is. That was something that I did a lot of research about at one time, but I don't remember what it is. Let's read these stories. We use random walks to simulate the fluid limit of two coupled diffuse limit order books to model correlation emergence. The model implements the arrival, cancellation, and diffusion of orders, coupled by a pairs trader profiting from the mean reversion between the two order books in the fluid limit, or a limit order book with vanishing boundary conditions and order volume conservation. We're able to demonstrate the recovery of an EPS effect from this. We discuss how various stylized facts depend on the model parameters and the numerical scheme, and discuss the various strengths and weaknesses of the approach. We demonstrate how the EPS effect depends on different choices of time and price discretization. This shows how an EPS effect can emerge without recourse to market microstructure noise relative to a latent model, but can be rather viewed as an emergent property arising from trader interactions in a world of asynchronous events. Okay, so there's a lot of stuff that I don't know, because I don't know what an EPS effect is. It would help if I had read that study. But I can go and I can read that study, and I have a better chance of understanding that study because I read that book. That's where I get all this stuff from. The stuff that I teach you, I'm trying to teach you from actual studies, right? That's why, again, I'm way open with telling people, like, if I'm down. In fact, if I'm up, I tend to keep it quiet. I don't want anybody to know. But I'll totally tell people when they're down, kind of to dissuade them, because I want people that understand that you can't look at individual performance. That's anecdotal evidence, and you can't necessarily copy their results. I want people that look for empirical evidence. Go and read the empirical evidence and base your trading off of that. And people that are interested in learning that stuff, regardless of whether or not they can ever make money from it, right? Anecdotal. And that's why we run things the way that we do. I don't put any emphasis whatsoever on you're making money or you're not making money. What matters is, and we prove that the market really is the way that we say it is. Let's see here. Market information events are generated intermittently and disseminated at high speeds in real time. Market participants consume this high-frequency data to build limit order books, representing the current bids and offers for a given asset. The arrival process or the order flow of bid and offer events are asymmetric and possibly dependent on each other. The quantum and direction of this asymmetry are often associated with the direction of traded price movement. The order flow imbalance is an indicator commonly used to estimate this asymmetry. Oh, yes, that's one of the things that my indicators can kind of do, is you can come in there and you can say, based on the current inside best 10 bids and offers, what is the imbalance between the bids and offers? Okay. This paper uses Hawk's processes to estimate the order flow imbalance, while accounting for the lagged dependence in the order flow between bids and offers. Secondly, we develop a method to forecast the near-term distribution of the order flow imbalance, which can be used to compare models for forecasting order flow imbalance. Thirdly, we propose a method to compare the forecasts of order flow imbalance for an arbitrarily large number of models. We apply the approach developed to tick data from the National Stock Exchange and observe that the Hawk's process modeled with a sum of exponentials kernel gives the best forecast among all competing models. That sounds like something I might be able to program. A Hawk's process is one of those things that I've always had a little bit of trouble wrapping my head around because there's some statistical math there that I didn't completely understand.
Block cell.
But I think I can totally. Okay, so there's the PMI data, by the way. Let's see here. Services was higher than anticipated, 55.2 versus 54. Manufacturing lower than anticipated, and that puts our composite higher than expected, and the market did move down on that. Was a little bit more dramatic than I was expecting for the S&P numbers, but I'm going to keep those studies up there because I might have the chance to read them later today. And now I need to give my head a rest because wearing headphones with glasses kind of causes the glasses to dig into my ears, and it's kind of starting to hurt. Anecdotal part, yeah. Maybe I'll just leave the headphones off. I don't necessarily have to hear myself talk. Although I don't like hearing the echo, I very much prefer the headphones. I'm gonna put them back on. We got like what? An hour and 15 minutes left? How many minutes is your opening range on your DOM? It's the standard 30 minutes. I don't use that property at all. I don't pay attention to where that line is at all. I guess I've mentioned it a few times, but it's not something that I incorporate in my strategy whatsoever. So like when it comes to levels, I'm interested in like, do we close at a new high? Or are we above all-time highs and lows?
Block sell.
Or like 90-day highs and lows? Like daily
Block
levels
buy.
I care about. Daily moving averages I care about. Like new high and low for the day I care about. Otherwise, levels don't really matter. And those are spots where I know that certain large players may become more or less involved. I don't believe that they really have a whole lot of prediction power. But when I combine it with everything else, it's like one flow that I can kind of factor in, right? Basically, I want to know all of the things that are predictive of the order flows that day, what day of the week it is, what kind of news is going on, why would somebody have a reason to come in and buy treasuries today? And I can list up all of those reasons, and sometimes there's going to be an imbalance in that, and then that's when I take a trade, right? So one of the things that I factor into that model is like, are we exhibiting momentum on a daily bar? Because if we're exhibiting momentum on daily bars, that is to say, like, the treasuries are breaking out into new 50-day highs or 90-day highs or whatever level you want to set it at. That's a lot of momentum trading firms do have models that will do things based off of. So if we pass those levels, then I'm looking to see those order flows come in. And if I see them start to come in, then I will take a trade. Let's see here. How can I get ES and NQ data into Excel? There's so many ways, man. There's a lot of platforms that have an Excel plugin. So as an example, the Refinitiv, there's this, I forget the name of the company that you can get access to Refinitiv through, but there's this company that offers a kind of a version of a Bloomberg terminal, except for that it's coming from Reuters instead of Bloomberg. And in there, they have an Excel plugin. So any of the data that you're getting in there, you can have it sent live to an Excel spreadsheet, and then, do all sorts of calculations on those assets that you want. So you can do that. If you're trying to do like some sort of broader thing, like I just want to do a calculation and I need like daily S&P 500 opens and closes, a lot of that data is just kind of already out there. I've used NinjaTrader where I've programmed things to write it to a comma separated value file for me, and then from there I can do whatever I want in Excel with it. So there's lots of ways. You have to be a little bit more specific on which data do you want, like which bars, how many years, that sort of. And then just search for the data. But if you're talking live, then you want to go like the Refinitiv route or find a platform that has. Okay, so open, high, low, close. What time frame? Then the other thing is what are you going to do with it in the spreadsheet? Because maybe it makes more sense to just program a NinjaTrader spreadsheet to test it, right? Daily. So then that's easy because you can probably get daily. Let's see if we can search and find it on a web search. Daily, open, high, low, close, ES. Well, you can definitely buy it from the NASDAQ. Here's Yahoo Finance. Historical prices. Here we go. The S&P 500. Open, high, low, close. Blah, 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 blah. Here's a big, huge table. It goes back really far. So what you could do, well, that only goes back to 2023. But you might be able to just, like, select all of that and copy and paste it. Oh yeah, you're right. Excel has data for stocks. That's also true. In fact, I think I have an example spreadsheet with that. Nope, it's not that. I don't remember what the news.csv was. I swear that I had one that was like stock data. Let's see if I can find it. No. Browse, maybe? Hold on. I don't want to cover up the screen. I'm going to search for it over here. I was hoping that it would be like in the recently used, but I think it's been a while since I've messed with it. Here it is. There we go. So let's see here. So I come in here and I tell it, I forget what you do, but you basically, you come in and you type in a formula. Oh, you know, that's the instrument, and then all of these other columns are like, you know, dot price, etc., etc. So you get all this data. So you can, there are ways to just, like for daily data, I think you can actually like just straight up get it in here sometimes. I guess this one is not history, it's just the current price, huh? So. Get floor pivot data? Okay. Sure. Why not? For that, I would rather just pull it up in NinjaTrader. Well, I don't know what platform you're using. For me, if I'm doing that, I just load up the S&P 500 on a daily chart and I add the floor pivots indicator to it, and then I start doing my back testing. I don't think I have an example of that I could show you at the moment, but I have tested that. I'm going to bet that the floor pivots are going to be, you might have to do a little bit of custom work. Let's see here. So here's a daily chart. Do I have a floor pivots indicator built? Isn't it like built in? No, I don't think it is built in. Maybe pivot. No. Oh, pivots. Oh, yep, that's them right there. That's correct. Okay. But do they work on daily bars? Let's find out. No, they don't. Actually, does it give me an error when you do that? Doesn't give me an error, but this is really starting to hurt my ears. Can your add-on isolate an alert with that? Well, so yes, there's kind of a lot of different ways that you could do that. I think that we would have to be more specific about what our trigger is, right? Because what you're doing is you're looking at a picture and you're saying like, oh, here's an area that looks interesting to me. Now what we have to do is we have to say, what makes it interesting? How can we list out specific conditions that call that area out? And then based on what we want those specific conditions to be, we can figure out which way to use the indicators is the best, right? Like market depth, they will tell you about big individual changes, right? But there's also another one that is like, what is the overall bids and offers? And there's even ones that are like, you know, separating that out by individual prices. And so, you know, you kind of have to be a little bit more specific. But it's like a complicated thing because then we're like, okay, so we're going to backtest it. But then you run into the historical level 2 data issues. So there's probably other stuff that we would want to do first if we're going to go further down into researching that. Floor pivots, it looks to me like this indicator does not work on daily bars. So what I would do instead is we could come in and we could just add 30-minute bars. So now that we have 30-minute bars, we do get pivots. And then, you could modify the indicator to output those pivot values, essentially, into a comma-separated value list. And then you could, now that you have them cached, essentially, you can pull them back into a daily series with a different indicator. That's how I would probably go about it. Or just use daily bars and set your back test up to, like, you have the 5-minute bars, you can see where the pivots are, but it's actually back testing on a daily bar data series. That would probably be less work. That's probably the better way to do it. My wife says I spend so much time while working and during night looking at charts, including when waking up in the middle of the night. Can that be considered an addiction, and should I seek help? Yeah. Trading can very easily turn into an addiction. The looking at charts part of it alone is, I would not think, is likely to be addictive. It's the actually taking trades part that's addictive, and you might just associate all of that other stuff with that trading, and so you do it obsessively. And then, because I tell you what, there's only so much value you can get out of charts, guys. There's just some of the most powerful things that move markets have absolutely nothing to do with the price history. So your past price history can only accomplish so much, right? If you believe the efficient market hypothesis, which has been disproven, but the efficient market hypothesis says that all available information is already encoded into the price there. So if that's the truth, then if there's anything that you could possibly predict, you should be able to predict it from past prices, right? But it's just not the case. There is tons of stuff out there that you can know that's not factored into price. It's a lot more valuable to spend all your time reading that stuff, right? Like, if you're going to waste your time reading things, waste it reading Zero Hedge and the Wall Street Journal, right? Instead of looking at charts. And then you're going to learn a whole lot of other information that will be valuable to you outside of just trading. For instance, I have a pretty nice house. Okay, it's not an amazing house, but relative to most other millennials, I'm doing pretty good. Most millennials cannot afford a home. Look, I got the wainscoting in the background and stuff, like, it's a pretty nice office, right? How did I do that? Because I knew so much about interest rates that I knew when it was a good time to buy a home, and I knew that home prices were gonna shoot up in the future. So I got in as early as I could. And I would have only have known to do those things. The only reason I knew to do those things was because of all of the research that I was constantly doing, reading everything that I could on CNBC and Zero Hedge and other financial news outlets. I think that it can gain a lot more edge from reading the news than you can from the charts. Charts still have their use. Like, the thing, if you really want to study charts, what I would do, well, I have a chart. What does Seth's daily chart look like? What are the things that Seth thinks on a chart might actually be valuable to you? 50, 100, and 200-day moving averages. What the range of the day is and the average true range. I have it here listed in ticks and percentages. Can probably make that one super small. And then ATR stop. So ATR stop is basically a measure of, like, what is the average true range, and then we set a stop based on, like, when we get a high, like, what's the furthest that it's gone against it. Sorry, I'm got this backwards. So, like, we're moving up, then it's gonna say, based off of that high, what's like a 2 standard deviation pullback from that high, right? And that's what that line is. that becomes a very effective mean reversion point on a daily basis. So when I basically, when it crosses those lines and you see it flip like that, that's basically a point to say, it might pull back there a little bit. They'll like to come back to that area, and you can see they do, right? Oh, that's interesting. But it actually ends up, over the long run, it actually ended up becoming resistance. Anyways, that's it. And then, of course, I look at the chart and I'm looking like, is this how many bars back do I need to look to say that that's a low, right? That's important too, because that is basically the best way to see if momentum is being triggered. That's it. That's all I look at. And of course, I come in every day at the charts and, are we up or down overnight? That's all I really care about, is if we're up or down overnight and like what the correlations between everything is. That's a mighty big bid there at 11.5. Oh, Octavius is noting it too. M3K MBO at 11.5. And it just pulled when people started trading into it. Man, I tell you what. So if you're just joining the stream, you haven't been with us all morning. I'm getting an elbow surgery today. And one of the things with the surgery is you're not allowed to eat anything, because what if you throw up during surgery? They don't want to be like, you choke on your own throw up and that sort of thing. So you're not allowed to eat. I am so hungry right now. And thirsty too. I want to eat the food. Well, I guess I could have a good meal afterwards. Now I'm going to go search. Where should I go and eat? Should go to a Korean barbecue. Yes. No, I don't want to spend that much money. I think it's gonna be a Cafe Zupa's day. Probably. Get myself a nice big salad. It sounds so dumb, but like, because like eating a salad, like you're trying to lose weight. But I feel a lot better when I'm getting a good salad. I think it's that magnesium. I think that we're all just deficient in magnesium. Oh, hey, they traded through that 11.5 without having to trade a whole lot of volume. So that MBO was basically all spoofed. Wait, am I reading that right? Or did I miss something? Let me just double check here. No, it looks like there maybe was some volume there. Oh, no. There's some volume. Okay, yeah, maybe there was some volume there. Overall, the market has been looking pretty bearish this morning after that PMI data, right? They spiked down pretty hard, reversed back up, and now they are testing that downside again. Okay, Octavia says it did fill. Okay. I was gonna say I didn't see it trade, but when I look at cumulative delta, there's a big enough bar there that it looks like maybe it did actually trade. But it doesn't look like it turned into like 10K iceberg sort of thing, like what often happens with those when they trade. But it wasn't an all-out spoof. That's interesting. I don't know if it really tells us anything though. I mean, it's kind of interesting that there was a transaction like that and that we're 2 ticks below it. So that would be the sort of a thing that might kind of start to get us stuck down here and prevent us from going down for the lows. But so far that hasn't hindered them. So yeah. How did you learn trading the bonds? Well, so a lot of it really came from just sitting here and watching the market every day and reading a lot, right? I've read, you're talking to somebody that basically lives on the CNBC and Zero Hedge front pages for the last 12 years. But there was also, when I first started doing this in day trading and futures trading, and there was a guy named John Bottomley, and he would trade the bonds. And I learned a lot of the kind of more esoteric things about the bonds from him. Like, how does the auction work? And the market tends to sell into the auction and buy after the auction. Those sorts of intricacies I learned from him. So where should one start if you're interested? Well, I have a couple of videos about it. Right? Someday I would really like to write a book that I think is a bit more complete of a source of information, but I would say that I touch on the most important things in my videos about the bonds. But, again, it's one of those things where it's like, man, we always, when we think about things are mental, mental. Day trading is a competitive game that is primarily all about thinking, right? The physical aspect of it isn't very strong. It's not like basketball. Basketball has a very strong physical aspect of it, right? What we don't realize is that when we say it's all in your head, that's still physical, because your brain is an organ, and all of those synapses that are going on in there are physical chemical processes happening in your brain at lightning speed, right? So, it takes time to train the brain for that. So you can't think of it as there's information that I need to trade treasuries, and then once I know all of that information, I have everything that I need and I can trade it, right? If that was true, then you should be able to just read a book and you're good to go, right? But the reality is a little bit different, because the reality is that trading is going to be about building those nerve connections in your brain to actually do the kind of analysis that you need to do. So that's why, if you're just starting out, the most important thing, obviously, if there was a source that give you all that information, then we would read it. Unfortunately, it doesn't exist yet. I want to make it. I have a short attention span, so me writing a book is a big ask. Okay, maybe someday we'll do it. I've written some stuff. Okay, but what is going to be the most valuable to you in the long run is going to be consume all of the financial news, understand what's going on in the market broadly, understand things that can predict future orders, and then come in and watch them every day. And then what you're going to do is after a year or two, you're going to remember the last time that there was a situation like this, and you're already going to have brain pathways and everything in your mind to help you analyze those situations, and you will just know what to do. It'll happen to you, man. The first time that it happens to you is just magic. So you hear something on the news squawk that is unlike anything you've ever heard or experienced before, but your brain knows exactly what to do, and you go and you enter the trade and it starts going your way. That's what you're really going for. Those are the golden trades that you're looking for. Is the one where nobody really knows what to expect, but you have the right model, you make the right decision, you're able to hit into it before anybody else does, and it goes your way. I think the one that always sticks out in my mind is I tell you what, I feel like I forget a lot of trades. Like if you're sitting here like, what are my top 10 best trade, favorite trades of all time? I'd have a hard time thinking about them. I would have to go back into my stats and look for individual trades and then go back on those days and see what was going on and look at the stream, and then I would remember, right? But this one I do very much remember, and it was that Donald Trump tweeted something about the trade war that was essentially a pretty significant thing about the trade war, and the market reacted very, very poorly to it. So this was the first time that I really started to hear people in the market start to complain about Trump tweets and the effects that that would have on the market. But I had TweetDeck open. I saw Donald Trump's tweet. I read that and I said, you know what? The S&P 500 is going to sell off of that. And that was like one of those good 20, 30 point ES trades that was just like absolutely insane. And if I remember correctly off of that, my broker actually took me out of the trade earlier, even though it was profitable because of the volatility. So, or there was something weird. Actually, it wasn't that, but there was something weird about the price that I got when I took profits on it. One of my favorite trades. That's what you're going for. We're building a model in our minds about how to trade, and that requires coming in and consciously thinking about it and watching the markets every day. Because as you do that, you're building physical structures in your brain. I have trauma from yesterday that I will never forget. Yeah, the whole thing about the revisions number not coming out for 30 minutes is gonna stick in my mind for a while. But there was another one of those recently, and I can't even remember what it was, but that was not there was another kerfluffle with the Bureau of Labor Statistics that made headlines, and I can't remember what it was. And it hasn't even been a year. It's just, man, like just too much stuff is happening these days. Is what it is. That, and I'm not on my medication, so it makes it a little bit harder for me to recall things when I'm not on my medication. But geez, there's just so much has happened this year. I mean, I guess maybe that to some extent that's a good thing, because the markets are so different today than they were like during COVID, for instance, right? That's kind of a distant memory from now. In fact, we're starting to get to the point now where there's not a lot of people that have survived from, the big influx of people that came in 2021. So that's kind of curious, isn't it? How much time do we have left? 45 minutes. I kind of want to get... I think I'm actually going to stop the stream. No, I think I can do that. And I have to go and shower. Before I leave, I have to shower with antibacterial soap. Because I guess, because they're going to cut my arm open and everything, they don't, they want to minimize the chance of infection as much as possible. So bathing with antibacterial soap is important. I didn't have any antibacterial soap. Isn't antibacterial soap supposed to be like bad for you and your immune system and all that stuff, right? So I had to go and buy some this morning, and I did that before I started this stream. Basically, went into Walmart like as soon as it opened. Let me tell you what, man, Walmart at 6 a.m. is a little scary. Not like scary like, oh, I'm gonna get hurt, but like the people there kind of look a little scary, One of the cashiers kind of looked like a meth addict to me. It's like they look like they're 70 years old and they have no teeth. That's like, actually, they're probably 40 or 50 and they were a meth addict. That's probably what's going on there, right? Like, but there's not a lot of good looking people at Walmart at 6 a.m. They're all still out running. But I need to wash again, essentially, before I leave. And there's also the meeting, so I probably should be fine. Do that and wash, and there we go. I have, I did a good job. The beginning, I talked about it at the beginning of the stream. how, it's a little bit nervous. Like, can you believe you're gonna trust like people that are basically complete strangers to cut your own arm open and everything, right? But then I haven't thought about it all stream, so that's good. I feel like maybe I missed a comment earlier on. One thing I would point out, though, D, is that if it's like a really big stack that happens all at once, the market depth tape will identify those and make a sound. And I find that to be really useful. Hasn't been happening as much, but I'm kind of hoping that when the summer is over that we start to see that kind of behavior a little bit more. Oh man. Sorry, I totally forgot about this. Was somebody on the stream the other day that was saying, "Hey, I'd be interested in helping edit videos with you." Because I'm totally like, you want to edit videos, all you got to do is just cut, beginning of the clip, end of the clip, right? But you also have to be able to figure out on your own, without my input, what would be a good thing to snipe out at the stream, right? Like, oh, watch the stream. I like this part. I like this part. We'll cut them out and we'll turn them into shorts or whatever the deal is, right? Because I don't have the time to go and rewatch the stream and find a spot like that, right? So I've been looking at like, how would you actually practically do that? Because the whole process of like taking source videos and like transferring them to somebody else and all of that is actually can have a lot of problems. One of the big problems is that there's not really data services out there that allow you to store files that big and, download them at a reasonable speed. Like I could use Google Drive, but it would probably take you like 3 hours to download all of the video. Well, DaVinci Resolve has been working on these issues, and they have a really good system that just beats the pants out of everything else in the industry. So what you can do is you can have a cloud account. You can spend $20 to $50 a month on an account that gives you a certain amount of storage space. The storage space is fast, and it uses all of you're basically editing the same project file. So basically what I can do is I can go and go into the project, import the media into the project, and then that's all I have to do. And then it will, the person that has the project on the other side just opens the project and everything's there. And the thing even does like, it handles proxy media versus real media, which is like, you don't necessarily want to download the whole huge source file because that's going to be a really big file. So instead you work on files that are smaller in size. They're not as good of quality, but they're enough for you to know which frame to cut things out, right? You work on the proxy media. So what I can do is I can set something up. It has the proxy media thing set up. It downloads to your machine those proxy media. It's lightning fast, so you get it like almost immediately because it will download it to you as fast as your internet can go. And then all you got to do is edit it. And as soon as you're done editing it, I can see what you've done. I can review it, go like, okay, this is good. I can make changes myself if I want to adjust things a little bit. And then I export it, and it gets exported at the full, nice, good quality resolution. So I really kind of like this system that DaVinci Resolve has, and I've looked at a bunch of different stuff, but I think that they're the best. I also think that DaVinci Resolve is the best editing software, to be honest with you. Doing things like color grading is a little bit more complicated in DaVinci Resolve, but I actually really like the system. So you do have to learn it, but I feel like when I learned how to edit in DaVinci Resolve, it was like 1 day. So yeah, I have this system. Could totally use if I have somebody that wants to edit. The person that is talking about doing editing is nervous about using DaVinci Resolve though. So I'm trying to convince them how cool DaVinci Resolve is and how easy it is for them to learn it. I think that's really cool. But maybe he doesn't do it and somebody else out there is like, hey, I'm interested in editing videos. I would do that. Then we could set it up. While I was giving that rant, we did move to new lows, didn't we? I kind of missed that. Oh, actually, it wasn't new lows because the low was 08 half. I see. But it's looking pretty bearish. A cumulative delta isn't super strong down here, but there is an overall, like when you get to the higher level, there is an overarching downtrend. It's just this kind of little uptrend right here would have me a little bit like, okay, I don't know if they're actually going to go for it or not. I guess we'll see. Did you watch Hit Monkey? No. What is that? That an action 2021 action series. Hit Monkey is a character appearing in American comic books published by Marvel Comics. Okay. Well, I haven't. You know what I've been doing lately? As I've been watching the older Marvel movies. Basically everything pre-Endgame. It was so, like, at the time, I remember feeling like, you know, like, it's cool that they're doing this sort of a thing. They're pretty good movies. I don't think that they're amazing. Like, I remember thinking that the second Avengers movie was not that good. And I was never understood why people were just so in love with that and didn't like the Superman movie that Zack Snyder did. But you know what? Now I look back at that and I'm like, but you know what? Zack Snyder does have some pretty big deficiencies in his storytelling. So yeah, that one drives me nuts. Hey, DC, just remake the cartoon show, the Justice League cartoon show, in live action. That's all you got to do. It's not hard. Why can't you just do that? I don't get it. Whatever. It's Warner Brothers. They're never going to take a win when it's that easy. I digress. Those Marvel movies are way better than I thought. Like I'm looking at it now and I'm like, they're never going to make movies this good again. Like something that is so epic and on such a big scale and has like as amazing of graphics, especially like the Doctor Strange movies. Like, it might be a really, really long time before we see movies like that again. It's kind of sad, but maybe a good thing too, because it was kind of getting a little ridiculous. Like the movies after Endgame. Ugh. And then there's the Star Wars stuff. Oh, don't get me started on the Star Wars. Now, we don't have enough time for Star Wars, I don't think. In fact, I'm kind of, well, actually, no. I'm still tempted to, like, let's end the stream early, prepare myself mentally, But I'm thinking, no. I have enough time. And there is something going on here. I want to see how this ends. Maybe we'll get lucky and this will resolve in the next 30 minutes and we'll see if we get a new low or not. And I want to see that. If we get a new low, could be kind of fun, don't you think? I wasn't watching, but when we broke those highs yesterday, it kind of looked to me like there was some fun there. Kind of looks to me like I missed. It's been a while since I've seen a really, really good stop run in the treasuries, hasn't it? It's been a few months. So maybe if I hope for it enough, it'll happen. We need to manifest the stop run, guys. Just everybody think about how badly you... No, you don't want it to be like, oh, I want it so bad and I'm worried that I'm not going to get it. You need to manifest it like it's going to happen. And it's going to be so amazing when it... Isn't that how manifesting works? I don't know. I've never taken those courses. I think it's all nonsense. You guys tell me. Have any of you know anything about the whole manifesting stuff? It's like it's constantly on my TikTok For You page, and I always scroll immediately past it. So I'm like, why do you keep showing me this crap? It's nonsense. But rich people are super into it. So maybe because I've convinced TikTok that I'm like an ultra millionaire. So TikTok and the Google algorithms all think that I'm a super millionaire. Like just as an example, one of the watchmakers that I get a lot of ads for now is Frederick Constant. Like, I don't have the money for that kind of a watch, but I sure do. Oh, let's go and look at them. Let's go look at them. I love their watches. They have some good watches. Look at that. That is a good looking watch. Or, if you want Roman numerals and everything. But I like the ones that are like the GMT World Traveler sort of things. Where's that one? Come on, I know you got one. Where is it? Not that one. Ooh, yeah. Look at that. Oh, I didn't know that they had that. You know what? That one's actually not that bad. $3,000 is more that I'm willing to pay for a watch at the current time. But I could see myself in a few years, hey, I have all of my debts paid off and I have too much money to spend. Maybe let's, buy a piece of jewelry. Might as well get a watch. Something under $5,000 I think could make sense. There we go. That's like this. The classic world timer. Oh, it's so good. It's such a... Oh, let's come and look at this one. Oh my gosh. And they've got like the whole globe in the back and everything. Oh, it's so nice. So nice. The blue one is even better. So like every time I'm browsing Instagram and it shows that to me, I don't know, click on the ad and stare at it for, a few minutes. It thinks that I'm rich and that I really want this watch. Well, I am rich and I really do want that watch, but I'm not going to spend $4,000 for it. No, thank you. No, thank you. They had another one. There was a newer one that I was like, oh, that's super nice too. What was it? Well, that was kind of a nice see-through one. Oh, that's everything. I remember there being another one that I thought was kind of cool, but maybe it was just one of these. Let's see here. Varek says, I have a Steinhardt 30. I've never heard of that. Steinhardt? Let's look that up. Steinhardt 39 millimeter. Oh, that's not bad. Oh, that's a reasonable price. I feel like anything under $1,000 is like reasonable. That's good. Yeah. So do you like the Pepsi look more, or do you know? I kind of like one that's like a solid blue background. That's not bad. Nothing particularly special about it, but that's pretty good. You want to see what kind of watches I like? What is? I have a presentation. I've shown you guys this before, but it's been a while. I'll show you my presentation. I have a presentation. Where is it? It's here in my notes. I think it's inside of this one. No, that's not it. Oh, here it is. Yeah, here it is. Open with Brave. There we go. Okay, so the coolest watches. For me, a watch of 45 millimeters is pretty big. I have super small wrists, okay? I'm a very thin guy. So I can't get too big of a watch, which is kind of a problem because the watches that I think are the coolest tend to be really big. So here's this one from people called MTM Watch. Oh my gosh. I just think that's so cool. Like that military look with lots of little notches and the numbers everywhere and a bunch of different dials, and it's black. This watch is cool. I really like this watch. I also really like watches that have tritium illumination. So they kind of have these things. It's like tritium. It's like radioactive, but the casing is enough to shade you from the radioactivity of it. So it glows very brightly in the dark. Super nice. So here's a Luminox one. I really like, again, ones with like the time zones around the edge. So you can move the bezel around and then it will tell you what the time zone is in all of these different parts of the world. I really like that feature on the watch. So that's why I got that one. Here are some tracers that look pretty cool. I don't have the picture of it in the dark for some reason. But this one is really cool in the dark. And then I get these ball watches. Oh my gosh, some of these ball watches are super cool. Like if I'm gonna spend $5,000 on a watch, maybe should be a ball watch. That one's pretty nice, standard, and it just has those big notches for the glowing. Pretty good standard one. That's maybe the one that I'd be like most likely to buy. Here's a black one that's a little bit more bulky. Then we get into the cool ones. Oh yeah, look at that. It's got the dates around the edges. It's got all of the tons of little notches. It's got a blue back, which is kind of nice looking. And it's got the big glowy parts, right? Okay, but then you get into these things. Like these ones, it's kind of a little bit more of a dive style watch with, the way that the thing around the edges and the huge crown on the side. Okay, but a bunch of different subdials. And then this one right here. Oh my gosh. Okay, it's $6,000, but that is so effing cool. I think that watch is the coolest looking watch to me. I tend to prefer something that's like a still silver color, like bracelet. But let's see here. You got a suggestion for me, Monta Sky Quest. Why did you delete your other? I hate it when you guys delete comments. That's not bad. Sky Quest sounds good because I also like I move more towards an aviation watch than a diver watch because my wife's a flight attendant. We fly a lot. That is a pretty slick. I like the font that they're using on the numbers there, that's pretty good. Wait, let's just go. Let's look at all of them. Oh, that's nice. I like that look. That's unique. Something about that stands out to me. Noble. That's also kind of good. I think it's kind of like that soft edge. I don't know. Noble Voyager. I see. Ocean King. Okay, that's just like your standard dive watch. Sky Quest. I think of all of these, I don't know. I'm not really huge into the. I don't understand the the dial is black on one side and blue or red and blue or the Pepsi color or whatever. Like I don't understand that. What the why that's popular, but popular and worth more. Triumph is kind of similar to the other ones. That's not bad. But it's not as cool as that. Plus, that one has tritium in it. Oh my gosh! Why don't I have the colors of like when it's glow in the dark? Yeah, Rolex does that, and everybody copies it. Exactly. Okay, here it is in the night. Is that not cool AF? Tell me that is a. Oh, I just think that's so cool. You got the tritium, and then all of the little sub numbers pop out too. Oh, it's so cool, guys. It's so cool. I want it. It's added in your wish list. Oh, I have a wish list? I do. Oh, no, I don't. I don't know. That's weird. The problem, though, with this watch is that it is where's the information? Features, is it that? Oh, here we go. There we go. Case. 45 millimeter. Too big. It's too big. Because I put a 45 millimeter watch on that, I had looked at, I thought was really cool. And then I put it on and I was like, oh, it looks terrible. It's too big. Let's see. A Rolex is able to do a 2-color bezel very well when with different colors, and nobody has the capital to make the same bezels as them. They use simple color and it looks bad. Oh, okay. Well, I don't really think it looks that cool. I don't know. I don't wear the watch that I do have. I don't wear it that often, to be honest with you. Kind of gets in the way. I would like to get a watch. Well, I think the next thing that I want to get is like Garmin Instinct crossover. I think this thing is kind of cool. Sure, these guys probably have a good picture of it. Yeah. So like they have a version that's just like the digital watch, right? But then they also have one that has physical hands. And like when you're using the watch to like go through things and use the functions, the hands like move out of the way and then move back when you go back to the regular mode, which is kind of cool. But this is, monitor all your vitals and all of that sort of stuff. So I think that's the next thing that I will get. And then you can get it. I think it comes with a rubber bracelet, but maybe I would switch it over to like a fabric, like a NATO strap or something like that. Something that's a little bit more comfortable for everyday wear, because I find the metal bracelet to be a little bit too distracting sometimes. Actually, I can't even remember what it was that bothered me. I don't think I have it. Yeah, last time I used it was, you know, I'll wear it when I go out. When I go outside, I'll put it on. Anyways. Watches. Fun stuff. Well, they still haven't broken the low. I don't know if they're going to do it before we go, guys. They love to do that to me. Just refuse to go down until after we're done trading. Oh, that's funny. I just pulled up, you know, my email tab popped up here. I don't even know why I brought it up, but then right at the top there was a newsletter about watches, and so I'm pulling this out. Look at that. UWork brings back the electromechanical control with pieces of the actual Blackbird. What? EMC SR71. I must have this. How much is this? How much am I going to be out? How much am I going to be out for this watch? I shouldn't even be telling you guys about it because you're all going to go and try and buy them all. It's probably going to be like a huge amount. Oh, there we go. The watch will be limited to 10 pieces with a price tag of 150,000 CHF. You're not getting that one. But holy crap, is that cool, man. I like the look of it, and it's got parts of a Blackbird in it. Wow, that is too cool, guys. That is too cool. Too cool for me. Maybe you know, Elon, if you're watching, you should go buy that watch. Oh, you know what? I totally forgot. We're supposed to get RFK endorsing Donald Trump, right? Well, I don't see any news about it yet, so. If Trump wins, the Fed will stop cutting at 4.5%. Well, we'll see. Michael Every of Rabobank. Actually, you know, his prediction might be correct because, like, I kind of expect that if Donald Trump is elected, that things in the markets should just go along like they were. I don't think that we're expecting some sort of tax change or anything like that. So that wouldn't be like a huge reason for the markets to rally per se, but, you know, just relief that, like, we're not going to go into communism, right? And I am concerned that the Federal Reserve shouldn't be able to reduce rates very much. They're saying 2 cuts and then they'd be done. That's interesting. So maybe read more about that later. Golan CNN journalist dragged for fact-checking JD Vance joke about Tim Waltz. Wow. But nothing about RFK endorsement. So who knows? Well, we got 10 minutes left. Maybe it doesn't actually happen. Maybe it's all a giant bait and he doesn't endorse Trump today. Then that... You never know, guys. What's this? Trump's most valuable advisor is his 18-year-old son, Barron. Sources reveal the young man is behind Trump's new unprecedented efforts to reach Gen Z. He convinced Trump to go on Aiden Ross's stream and Theo Vaughn's pod. Who's Theo Vaughn? I don't know who that is. I still don't know who that is. I mean, he looks familiar. I've definitely seen him before, but this is not an influencer that I frequently get content about. Wow, he talked about cocaine on his... Okay. Okay. Weird. Oh, this was... Addiction seems to be Theo's sticking point, as Theo was addicted to whatever. Well, yeah, he does kind of look like he was addicted to something at some point. It's funny. I was just kind of like, it kind of has that look like he's on. The 30-year went to new lows. They're kind of lining up. I think that it will eventually happen, but I'm just not sure if it's going to happen before I leave. Listen, I know you market makers, you're listening to this stream. You watch. You're like, what's Seth doing? How can we screw him up the most today? I know, we're serious here. It happens. If you could make this happen before I have to leave, I would really appreciate it. That would really make my day. Come on, I'm getting surgery today. Throw me a bone here. So close. I mean, it's only one more tick and then they're at the low, right? It happened. Dana Bash says the Harris Waltz campaign is tailoring their message to appeal to low testosterone men by using Doug Emhoff and Tim. Okay. Wait, how they're putting in maximum effort to sell off it? They did just take out 3,000 contracts there, man. But only 42 at 08 half. It's a little eerily quiet there now that they've done that. There's an iceberg on the other side, though. They're reloading it. I think it's going to happen. Let's go. Come on. I don't know. It's pretty thick today. So what might be a really spectacular stop run in super thick liquidity might not seem as spectacular to us. But I'm still excited. I still want to see it happen. I appreciate it, market makers. They're helping me out. It's okay. It's okay you mess with me. Just don't mess with me too much. I don't want to lose too much. Right? We got to be able to keep trading at the very least. Right? Oh, I'm almost tempted to put a sim order in, but I'm not. Oh, so and they'd be like, "Oh, Seth, you're getting too ballsy now. We're gonna have to reverse." Can someone explain to me, how do you appeal to low testosterone men? Is that really actually a demographic that you can appeal to? That's like, who out there thinks of themselves as a low testosterone? Dude, it's like, okay, it's weird. You can see her realizing mid-sentence how stupid this sounds. Yeah, it does. Okay. Maybe it is just somebody on CNN being stupid. This is what I get for reading the Trump forums while I'm on stream, looking for anything about RFK, but I'm not seeing anything, so. Oh, it's the top of r/conservative on Reddit too. Is this what we're gonna talk about for the next over the weekend? Really, guys? Translation: Tim Waltz. They're acknowledging that Tim Waltz is an icon for soy boys. I don't really think that Tim Waltz is actually low testosterone, is he? Well, he does kind of have that look, but he has that look like, you don't take care of yourself very well. But he's got the happy fat face, right? Have you seen the way he acts? He's the queen of soy. Oh, okay, I haven't seen that. All of these people are over here agreeing with the comment. It's just too ridiculous for me to take seriously. Come on. Oh, whatever. Oh, here we go. Somebody's got a great clickbait title for me to yap about for the next 2 minutes. Indicators are bullshit. Let's read it. Kind of clickbaity, but I believe it. I spent so much time watching videos and reading about different indicators and all of that. None of it was working well enough to get a profit. Okay, I'm liking what I'm hearing so far, but I have the suspicion that it's going to say really all that matters is the price action. I feel it coming. I feel it coming. Okay, here it was always say, eventually I just got rid of all of my indicators. I trade on 5-minute candles, and then on my other monitor I have 1-minute candles, and yeah. It's price action bullshit. Guys. The chart, very limited ability to tell you anything. Very limited ability to tell you anything, especially on an intraday basis. You still want to have it up, but you all act like that's the only thing you got. If that's the only thing you got, then you're probably not going to have success at this, guys. At the end of the day, trading is based on your intuition. Well, there's a big part of it, sure. And you can only grow that by practicing. If all that stuff really worked consistently, we'd be millionaires. All my most profitable trades are simply based on this looks like a pretty good deal, I'll go along. The best indicator is the one your brain gives you when you've been staring at charts so long to subconsciously pick up patterns. No! It's more than it's not just the chart patterns. Okay, whatever though. And there's no button for that on NinjaTrader other than buy or sell. Well, that's cool, you're using NinjaTrader. Only writing this because I saw a guy say he lost his job and now he's going to start trading full-time. Oh, that's the worst. This is when people want to do that. The dude is probably screwed, but I wish him the best. You got to lose a ton of money before you really start to pick up on the signals. At the end of the day, what we do is logical gambling, but gambling is secure. Okay, so now what you're really saying is there's actually no edge in looking at the chart at all. You're just taking on risk? Okay. Guys, charts' ability to actually tell you things are extremely limited. Anyways, I'll leave you with that. I'm going to go and have somebody tear open my arm, and I will see you tomorrow. In the meantime, stay excellent, team. They backed off of that stop run. It's high liquidity. I think that they will eventually trade lower, but it's so thick, so it's going to be a slow mover.